Yo, what up, fam? That was right here. So, guys, today we're gonna learn about something that is more interesting, and we're gonna learn about a simple strategy that you can benefit from the market, right? So today we're gonna learn about a trend line. So what actually a trend line does is that when a price comes to a trend line in bounds, it shows an area of support or an area of resistance, right? So as you're looking here, this is Weltrade, and we are trading. We are analyzing an instrument that is called FX Volume 8, right? So we are on a weekly time frame, as you can see on the screen, right? So you need to come and pick this line right that is right here, and then how to draw it. You touch the first point and the second point, right? This is how you can draw a trend line given 2 points, right? So you see that the market came here and this first zone that is around here, and then it came again and touched the trend line at around this zone. So what are we expecting the market to do is to come and touch this trend line again for the third time, and after touching this trend line for the third time, it has to bounce again to go to the upside. So this shows that the market is trending up, right? So if it was trending down, we'll see by the market. I will give you the example of a trend line that goes to the downside or trending down right here. So as you can see right here, so we are waiting for the market to come at around this zone so that we can buy going to the upside, right? So another trend line that we need to draw that can be seen on the screen is this from this above right here. There is another trend line that we can draw, right? Yes, and there is another trend line that we can draw again, that is here. Let me show you. That is here. This is another trend line that we can draw. Yes, because there are 2 points that the market got rejected from, right? This one and this one, and for this trend line, this one and this one. So currently we are working on this one that is an immediate trend line, right? So we are waiting for the market to come here and go up. So let's go down to a daily time frame and draw another trend line so that we can see actually what is happening in the inside of the market, right? So we go to the daily time frame that is right here. So what do we see? Can we draw a trend line on a daily time frame? We can see that the first trend line that we can draw that is there right here. We can, let's see. You know what, guys? Yeah, when you are trading trend lines, you don't need to force things. If there is no trend line that you can draw, there is no trend line, right? Don't force it. So on a daily time frame, there is no trend line that I can say that I can draw. So I have to go to an H4 time frame and see, right? The first trend line that we see, right, that has got 2 points is this one. The first one is starting from this, right? This is the first trend line that we can see, right? Exactly. And then another trend line that we can see is this one. So what actually is the market telling us about these trend lines? And then there's this other trend line that we can draw that was happening at around here, but you don't need to mind about it because I think this trade is good, right? So let's work with these 2 trend lines. So what can we see from this inside and from these trend lines, right? We see that the market was trending to the upside when it came from this point, this point, this point, until it broke this trend line at around this one right here. And we see that the market, when it broke, it came and retested at around this level. We can say that the market came and retested this trend line that is around right here. So it means it closed below this trend line. So what does that mean? It came and retested this. So it shows that the market is about to go down. At the same time, we see that the market, it came and bounced from on this trend line, came down, bounced again, came down and bounced again. Now we see that the market is attempting to touch this trend line, but we can consider it as it has touched the trend line, right? So if we see a rejection at around this zone, we will simply say that the market is about to trend to the downside. So this comes and it helps to give us a confluence that the market now is heading to this zone on our weekly time frame. It gives us our confluence that the market is about to go down here. I don't know, maybe it's going to come at around this zone, right? So the confluence for the market to come down here to this trend line, we got it from an H4 time frame, right? I think yeah, you've seen it that the market is around this zone. We expect it to go down. I don't know, maybe the market can go up. No one knows where the market is going, but I anticipate that the market is about to come down right here, right? So if it breaks here and close it above here, now we'll be thinking that the market will be anticipating that the market is about to go up. But if it goes, it can go outside this trend line without, if it goes outside this trend line without closing above it, we anticipate that the market was doing what is called a liquidity sweep. You don't need to mind about it because I think most of you guys, you do not know about it. But today I just want you to mind on trend lines, right? How does a trend line work? Because a trend line is just a symbol wick. It's just a symbol wick, right? So I'm anticipating that the market is supposed to drop to this down level. I don't know, on a weekly time frame. So let's go to an H1 time frame and see what the market is doing, right? So we see this rejection, and what can we see? We need to draw another trend lines, right? Which trend line can we draw? Still, there is this trend line that is on an H4 time frame, and there is this trend line, excuse me, and there is this another trend line that is we can draw from here around here. So someone can actually be patient to wait for the market to break down here, to break this trend line and set their sell limits or trade from this zone and putting their stop loss at above here. But as for me, if I'm gonna end this trade right here, I'm gonna end my trade, the trade that I'm gonna end without any confirmation. I'm gonna end it at around this zone and put my stop loss at around this zone right here. That's it. Or if I see, I'm gonna put my stop loss at around here, but mostly I don't just randomly put the stop loss at around here. I wait for the market to see it. If it breaks here, I'll just hold my trade until I see a candlestick closing. But if the candlestick closes at above here, that's where I'm gonna put my stop loss at around here. But if I see the candlesticks comes up here and fail to close here, I'll just wait for that candlestick to close, and I will be sure that the market is about to go down. But primarily, I would like to put my stop loss at around this zone. So if the market surpasses this zone and closes above this zone, I would think that the market is about to go up. But for the sake of stop hands, I will just leave my trades with an open stop loss and wait for the close of the candle. If the candle closes below here, that's where I'm gonna put my stop loss. But the candle can come it above here. But if it fails to close it around here, and if it closes below here, above that candle, that's where I'm gonna put my stop loss and drag with my trade. I will write my trade down here to an weekly time frame. I don't know where it's gonna hit this trend line. I don't know where exactly it's gonna hit this trend line. That's where my take profit is going to be. So actually my risk to reward ratio is gonna be something like let's see. It's gonna be something like 1:5, 1:4. Yeah, I think 1:4 is around that. Yeah. because it's gonna be a swing trade, right? But if the markets keep on going up, we'll be seeing how are we gonna draw our trend lines here. The 263 is here. Let's get it. Share.